Good afternoon from Singapore and welcome to Gulf Intelligence's Daily Energy Markets webinar. I'm Vandana, founder and CEO of Vanda Insights based in Singapore. A couple of major developments that influenced oil market sentiment last week. Of course, we had the Fed meeting, and subsequent to that, the signals, of course, Powell's remarks and the signals that the market absorbed from the Fed officials in terms of what the monetary policy trajectory was likely to look like. And, that was quite a dampening effect on at least the stock markets. And then we had the Russia oil exports ban, of course, which came as a bit of a shock to the markets. We had prices in rally mode again through intraday trading on Friday, but they retreated. Where are we now? Brent trading around $92.36, WTI around $90.45. What are the influences one should expect or be ready for in oil markets this week and going into the fourth quarter of this year? To discuss this, I'm joined by my guests today, Omar Najia, Global Head Derivatives at BB Energy, Vibhuti Garg, Director, South Asia at Institute for Energy Economics and Financial Analysis, and Omar Al-Ubaydli, Director of Research, Bahrain Center for Strategic, International, and Energy Studies. So we have two Omars today. I'll say Omar Najia for Omar, and only Omar for Mr. Ubaydli, just because it's easier for me to say Najia. Okay, Omar Najia, let's start with you. Crude appeared poised to hit the century mark more than a few times over the past fortnight, but each time so far it has retreated. What's your outlook in terms of prices and the key influences on oil going into the fourth quarter of this year?
So I think oil is going to go higher. I think basically, from what I see, it made like, if you want Brent, it made a straight line from about 72 back in end of June and went straight up to 96. So I don't think it's ready yet for 100. I don't even think 100 is that kind of a significant number. But I think eventually we're going to go substantially higher. And I think basically the background is geopolitical. So it's amazing that the Russians basically can cut production and everybody's, like surprised. So, they had sanctions apply, you want to sanction them, I don't know what. And then when they do something, it's like, oh my God, so I think more of the same. I think nobody now is talking about the oil price cap, the one that was supposed to, make the markets fall and whatever they were supposed to do. So nobody cares. Markets considerably higher. You have, so I think basically it's all geopolitical. I think the fact that BRICS admitted UAE, KSA, and Iran means that there's been a loss of control of oil prices. They tried to do everything with the SPR. They're trying now to say, all the news is saying like, no, the Russians, they can't do this because it can only last a week or 2 weeks because they have no storage. They said the same when it was supposedly cutting oil, that they couldn't cut crude because there is no storage and all this kind of stuff. So I think you
don't buy that then, Omar? Sorry,
no, not at all.
That seemed to be the consensus view in the market, that Russia cannot impose this for too long.
Oh, I remember that, when oil was trading at 67 basis WTI, the consensus is that we would fall, and we've gone the other way. So yes, I have no doubt that it's the consensus. Specifically
on this diesel ban, are you saying you do not go, you are not in that camp, saying that they can't have, okay.
Yes.
How long do you think it can go on?
Months. I think basically that they're doing it on purpose. They are doing what we call turning the screws. They want a change in government in the US. OPEC will continue to cut production. The Russians will continue to do whatever it takes to keep prices high. Why? Because the other side has massive debts. You keep inflation high, you keep forcing them. If you notice, last couple of weeks, you had all the, Fed, BOE, whatever, all of them trying to hold interest rates, right?
Yep.
Why? Inflation has increased, right? But yet they're all saying, no, we're going to hold, because they can, if they increase interest rates anymore, the US is already paying the same, about $1 trillion a year on debt payment than it is in defense. So the other side is going to continue on this increase prices, increase inflation, force the Fed or whoever it is basically to increase interest rates. So yes, I think it's strategic. And I think when you talk about countries and their needs and desires, it supersedes everything else. Just exactly like they said, we won't abide by the price cap. They did that. We said they're going to cut production. They did that. And at every step, if you notice, everybody was saying they can't cut production. There is no discipline. There is no storage. The oil price cap is going to work. Everything literally has been proven completely wrong. So definitely not consensus.
That's true. Yeah, interesting. The arguments that I read in supporting that view was that sooner or later they will plug the shortages in the domestic market, the diesel market, and which means they'll have to resume exporting. But we'll come back to that. Let me go to Vibhuti. I think the almost two parallel strains of debate and discussions in the energy markets, I mean, on the oil markets as well. One is, of course, where are prices headed next? And in parallel, as we get closer to COP28, 10 weeks away, of course, is this whole, and we saw that with the UN General Assembly last week as well, sort of a rising tide of sentiment against the fossil fuel companies and the markets, and to the extent that somebody like John Kerry, for instance, the US environmental envoy, is saying that oil and gas companies should just completely be left out of these discussions. But let's bring this discussion back to India and the G20. And one of the major announcements coming out of the G20 summit in India was the Global Biofuel Alliance, and something that India has been advocating and championing for a while. Can you shed some light for us on how you see this alliance operating? And also related to that, some concerns being expressed around India's own bioethanol plans, because they rely quite heavily on the sugarcane sector.
That's right. So India successfully launched the Biofuel Alliance along with Brazil, US, and there were other 19 signatories to that alliance. 19 countries had signed up for it. But you're very right. I mean, while our objective is to reduce our reliance on imports of oil, and given the price volatility, I think it's a good stand from energy security perspective that you are trying to come up with alternatives. But at the same time, pushing a lot of biofuel can be counterproductive, in the sense that while we have already achieved around 10% of ethanol blending with petrol, and that is really helping India in terms of reducing pollution because of the transport sector, and also reducing our reliance on imports. But on the other hand, what we are also witnessing, that increasingly India wants to push an increasing share of ethanol blending. But that means if you're going to use sugarcane as well as maize, one of our studies at IEEFA by my colleague Charles Foringham very rightly kind of calculated that, the same land, the distance, if, for example, you need 1 hectare of land for the same distance to travel for EV charging infrastructure, but you need about 250 hectares of land for sugarcane production. If the same distance has to travel, 150 hectares of land for maize production for traveling the same distance. So is it the right choice? Why not just leapfrog and promote more electric vehicles? As I said, while the intent is right to reduce pollution and do more, use more biofuels, but maybe it can also come at a cost of food security. These crops are very water intensive. So given the erratic nature of monsoons in India, that means more and more irrigation. That means more use of electricity, which might be fueled by carbon intensive technology. So I think, yeah, one really needs to have a careful thought. While using crop residue or waste can be a good choice of fuel, but definitely it may not be the best way of addressing climate change or decarbonizing the EV sector or the transport sector. Yes.
Yeah, I think we are all concluding that there are no easy solutions, and there's a downside to almost any route that we take to find alternatives for fossil fuels, especially. Thanks for that, Vibhuti. Omar, the Saudi Energy Minister, Prince Abdulaziz bin Salman, put up quite a full-throated defense of OPEC plus cuts and the additional Saudi cuts, speaking at the World Petroleum Congress in Calgary last week. Now, of course, we all know that the kingdom regularly distances itself from the concept of having price targets. But nonetheless, in recent weeks, especially with crude approaching the $100 mark, there has been speculation in the market that what, if anything, would prompt Saudi Arabia to start easing at least the incremental cut. Do you think that 100 is that magic figure?
So good question. So first of all, just in terms of background, this is exactly what the buffer that the Saudi Arabia has been, building for the last year or so is for. It's for situations where we've got the price rising seemingly uncontrollably, and it may put the world economy or certain economies in a difficult position. And Saudi Arabia is well placed now to relieve the pressure and to lower prices in exchange for whatever interests it seeks on behalf of itself and the wider OPEC plus group. Now, what would trigger that? I don't think it's as you mentioned, I don't think it's like a specific number. I think it's more related to the sort of geopolitical pressure and the requests that will be sent to Saudi Arabia. Now, going back to what Omar was saying earlier, one of the variable factors there is things like interest rates and the position of central banks as they tighten and as the leading economies in the world find themselves teetering on the edge of recession, or at least flirting with a recession more and more, then the more they will be, looking to apply pressure on the Saudi Arabia, or at least present requests for Saudi Arabia to relax. Whereas if, at the moment, for the time being, the US economy looks like it's going well, despite all the, all the interest rate increases. And actually, the main problem that it might be facing is another government shutdown rather than anything that is the result of oil prices being elevated. So I think those will be really the factors, but I don't think there's a specific number, and it's not like there's a computational system. Oh, it's gonna rub here, now we'll act. It's very much ad hoc. Let's listen to see what the pressures that are emerging are. Let's see what our interests are. But now Saudi Arabia at least has, with some patience, given itself the opportunity to be a strong and active member of the global economy.
So just following on from your point, there has been no pressure, virtually no, or shall we say no pressure whatsoever so far, certainly not from the US. We haven't seen anything from the IEA or the European countries, or even India for that matter. Do you think that is what will be the trigger? Saudi Arabia needs to hear some protests or requests to put more oil back into the market?
Well, first of all, remember that it's what happens publicly isn't necessarily what happens behind the scenes. And at the moment, it's not fashionable to request things from Saudi Arabia. So I wouldn't be surprised if there is some, discreet meeting. And Saudi Arabia is discreet. So if it is reached out to in a discreet manner by, by its partners and other countries, it will respond discreetly. It won't seek to make that public. However, regardless of any requests incoming or not, OPEC has its own calculations. OPEC realizes it doesn't want to, the goal is price stability for the benefit of both sides of the market. And so even if nobody comes to complain, their goal is not to jack the price up as high as possible. If they think that the price is reaching to a level where it will start, causing demand destruction, or it will cause distress, they will intervene unilaterally as a bloc. And they also realize that there exists a political cycle, and that there's quite a lot of myopia in terms of these requests being put forward to OPEC Plus. Whereas I think OPEC Plus has demonstrated quite clearly that since 2016, it's far more long-sighted than most of the geopolitical actors in oil markets. So I think they're monitoring. It'll probably be mostly a technocratic decision, and I don't see that changing anytime soon.
Yeah, Omar, Najia, if Saudi Arabia is leaning in favor of or considering putting some more oil back into the market, I suppose one of the market groups that would absolutely want to be ahead of the curve is the hedge funds and the speculators. And one of the discussions in the markets over this year has been how the hedge funds were quite sidelined initially, and then they have been quite rapidly building up length. Just based on the CFTC data, I see that has happened quite prominently since around the starting of July. Do you see much more room for speculative length to continue driving crude prices higher?
In a word, yes. So I don't see that the Saudis have been under no pressure. I think they've been under tremendous pressure. They released the SPR. Biden went to Saudi Arabia. But the and before, when they had all these meetings, OPEC Plus, they were threatened by the US administration, right? As in a diplomatic way, not, we're going to shoot you and all this kind of stuff, but they were. What's different is there's been no response to pressure. That's the first thing. The second thing is that in terms of what's different, I mean, I like to think most people are, all people are intelligent, and extremely so, not like imbeciles. So if you tell the Saudis and OPEC that in 10 years, we're not going to need you anymore, but by the way, let's keep prices low, and we're going to do this green stuff, and then we're going to decimate you and your industry and all the rest of it. I mean, I don't understand. Honestly, I think it's like delusional. So let me repeat again. It is in OPEC's interest to push the price so far, so very far, as to make everyone scream. Why can Apple come and say, we have an iPhone 15, which has nothing new except basically, I don't know, maybe they put an avocado inside or something. So, and they can charge whatever it is. But if OPEC want oil prices higher, it's like, no. We can't do that. Obviously, there are pressures. No, there is no pressure. That's why you've seen monumental changes in the market. You've seen Saudi, UAE, Iran join the BRICS, 80% of oil production, which means no more US sanctions. US dollar, petrodollar is on its last legs. You're seeing the world change before your eyes. And I think the same applies to oil prices, commodity prices, all that kind of stuff. But if we want to live and kind of keep saying that, no, what's good for supply, what's good for producers and consumers and all this kind of stuff, that's fine. In my view, you don't tell somebody that they're going to be useless in 10 years and expect them to behave the way you want them. That's it.
On that point, Omar, I couldn't agree with you more. But if in response, OPEC Plus ends up tightening the markets and driving the prices high, whether it produces the desired response as to, the world says, oh yeah, okay, this is not good for us, we need oil and gas for many years, or it produces exactly the opposite response. I think that's debatable. But
forgive me. This is the response that's already there. The response is, if prices go too high, we're going to find alternatives. You've already told them that you're going to find alternatives. So what do you expect? They're going to drive prices so high, and demand for energy is inelastic. Whether you heat your home or drive your car, it's inelastic. You've already
Absolutely.
said we're going to replace you. It's not like if the price gets to 100, we're going to replace you. So replace us.
And that's a good segue to Vibhuti's area of expertise as well. So exactly as Vibhuti you've said, and Omar, to your point, it's not easy to replace that oil and gas, and somehow that lesson is being driven home in a very difficult manner to the world. And related to that, Vibhuti, my question for you is that finance, sustainable finance. So G20 has set up a sustainable finance working group. But this is an area that you have talked about and you look at quite closely. What are some of the main hurdles that you're still seeing in sustainable finance?
Right. If you can allow me, I can just want to quickly respond on some of the comments made by Omar earlier. While the idea is to find alternatives, so having higher oil prices would really push for the replacement of alternatives sooner. The time period which we were envisaging, maybe, the shift would happen 10 years down the line. So if we are going to maintain higher prices, the shift might happen sooner. One of the examples is recently at the G20 as well, we signed a tripartite agreement with building corridors between India, Middle East, Europe, and that's for transferring of green power. So I think once those kind of initiative gets further strengthened, so definitely alternatives are going to be built, but it's going to take time. But that also means you are really pushing for debt trap for smaller countries like Bangladesh, Pakistan, who have been hugely reliant. And it's the same countries, Middle East, or IMF, who are bailing these countries out. So I don't know where to get the right balance. So while on one hand, having higher oil prices maybe the norm, but that means for smaller developing countries, you are putting such a big push on their economy and, further they falling into debt trap just because they don't have the financial resources to buy, irrespective demand being inelastic. So there is a cost attached to them. Now, coming to your point on this group being kind of formulated as Sustainable Finance Working Group as part of the G20. So a lot of important steps have been taken. So they have recognized the use of blended finance, which can really help in bringing the cost of capital down, especially for emerging economies. And that will unlock a lot of private capital. There is a lot of discussion on restructuring of MDBs as well, and a more detailed outline of how it's going to be done will be coming up in next month. So I think that's where MDB restructuring has become one of the center piece of reforms as far as the financing working group mandate is concerned. But there are a lot of other things. India wants to promote energy efficiency as part of Mission Life. So there are a lot of initiatives being taken, but the amount of capital required is huge. So public capital or blended finance or concessional capital alone will not solve the financing needs. So there is a lot of role that private capital have to play, and how do we catalyze and unlock more private capital is yet to be seen.
Okay, thanks, Vibhuti. Let's go to our survey question before I go back to Omar. So we have a report overnight, quite an interesting one, and it's included in our reading digest today as well. The Financial Times is reporting that nearly 3/4 of Russian oil is now going on non-Western ships, which is a much bigger fraction compared with about half is what we were seeing in the months prior. So my question is quite short and simple today. The G7 price cap on Russian oil has A, died a natural death, or will remain in play. We've deliberately kept the second option short. Will remain in play can mean anything. Of course, I highly doubt that anybody will actually retract it or end it formally, but so it'll remain in the background, or perhaps the US and EU at some point will want to revisit whether they want to tweak that. So in that sense, will it remain in play, or is it like basically it's there, but it's practically dead? So have your say on that. Omar, I was looking at your thought-provoking piece, which you posted on Substack, entitled "Why the Gulf Countries Like to Copy One Another's Projects." And I'd encourage our viewers to go take a look as well. I certainly found it a very interesting and thought-provoking read. How do you see this? You call it the policy mimicry. I found that a very interesting phrase as well. How do you see this playing out in the energy sector? And do you see any downsides to this trend?
Well, we see it very much so in the energy sector, with renewable energies. Now, I have to say, it is almost inevitable in the energy sector, given the, first of all, abundance of hydrocarbons, and then certainly the environmental constraints mean that there aren't as many renewable options as there are, if you were living in Germany or China. But what you do see is this idea of, first of all, joint ventures with with leading energy companies from around the world. This idea of consolidating energy portfolios under some umbrella of some big conglomerate's umbrella. This idea of continuingly, unfortunately, outsourcing the research and development. Sometimes it looks superficially or nominally to be in-house, but actually when you look at the universities and when you look at the scientists performing the renewable energy research, are very often foreigners who are not permanent residents or citizens of the Gulf countries. And then obviously, in the context of fossil fuels, they're all, when one of them, I guess, somewhat inevitably, when you hear that Saudi Arabia is drilling, you see that Bahrain is drilling, UAE is drilling, and so on. And obviously, Kuwait and Saudi Arabia have various shared interests on that front. So, if I were to demonstrate the policy mimicry, then I wouldn't look at the energy sector, because I think although it exists heavily in the energy sector, it is harder to, it is much easier to explain that just by the virtue of the, structural homogeneity there is in that sector in of itself. But I do think that, in all these circles, including energy, they could do with a little bit of inspiration, shall we say, a little bit of creative inspiration, and a little bit more brainstorming, a little bit less looking over the neighbor's fence.
Okay, interesting. Thanks for that. Do we have the survey results, Medlin? Okay, I had expected to see a much higher number on the top one, but okay, so it's about 70-30. Not an insignificant part of our viewers, ratio of our viewers think that it will one way or another remain in play. Okay, we have about maybe 1 minute, and I'll give that to you, Omar, Najia, for just to follow up on one of the points you mentioned earlier. You said, when I asked you about your outlook for prices, you said, yes, much higher, and eventually. Those are the words you used, if I recollect. So if I were to put you on the spot, when you say much higher, how much higher than 100 do you expect crude? And when you say eventually, what time frame do you have in mind? In 60 seconds.
So between now and first quarter, I think 110, even 120. I think this market, when I started saying market's going to the upside at $67, was basically, people were very, very pessimistic. No way, we're going lower. Those are the facts, quote unquote. Now, basically, people are skeptical. Right? So no, it's done a lot. That's it, blah, blah, blah. So next we'll get the optimist phase, and then we get the euphoria, and then we come down. So right now, I like the fact that everybody's a skeptic, because I like to, I think higher, and I like the fact that people are skeptical.
Okay. Yeah, so you haven't given me a clear answer on how much higher than 100 and when, but you're saying
110 to 120, somewhere between now and January.
Okay, we shall revisit that, inshallah, Okay, great. Thank you very much, all three of my guests today. I think we had a fantastic discussion. Omar, Najia, Vibhuti, Garg, and Omar Al-Ubaydli. Thank you very much. Have a great day ahead, and bye-bye for now.